Diversification is important, and most people should diversify, especially new investors. When you buy an index fund, let's say you buy VOO or any type of index fund, you're buying a basket of stocks, it's fully diversified for you. You always hear diversify, and it's for obvious reasons, right? To de-risk. Diversification is important, but as you get more and more experience with investing, I think more important than diversification is, number one, the most important thing is understanding the business inside and out. If you do your due diligence and you understand the business inside and out, then you're really focused just on the business, and diversification becomes less and less important. And what I mean by that is you, first of all, know the business, but also invest within your circle of competence. You don't have to start investing or worrying about areas or businesses or industries that you're not familiar with. There's so much out there, and people always get FOMO, and they're worried about what the crowd is saying and where the hype is. And if it's an area you're not familiar with, or you have no idea and you know nothing about it, then don't worry about it. But over time, there's going to be there are going to be spaces and industries that you get familiar with. Those will be your strong points, your strong areas. So those become your circle of competence. Once you have those industries or spaces that you're familiar with, then you start getting acclimated with those businesses. Then the important thing is to start understanding those businesses inside and out. Now, keep in mind, there's always great businesses to invest in. So when you're investing in good businesses for the long term, diversification doesn't matter as much, because ultimately you are buying shares of a business, of a stock that you believe is going to do well over the long term. At that point, it really doesn't matter if you buy in this sector and that sector and this sector. If you're worried about risk, because either you don't understand the business or you're a short-term trader. But as a long-term investor buying great businesses, that's really one of the least of my worries. If you look at my portfolio, there are a lot of companies in the tech sector. There are a lot of companies in cybersecurity. If shit happens and things go sour, if I didn't buy, those companies are not going to go down because I didn't diversify. Those companies are going to go down because I didn't buy the right businesses. When it comes to diversification, when it comes to sectors and stocks, I'm not too worried about it because I feel confident in how I research a business. Where I do diversify is different asset classes. So for example, you have some of your capital in stocks. You have some of your capital in crypto. You have some of your capital in real estate. Yes, I do believe in diversifying, because probably shouldn't just be 100% in stocks. And the one thing for me is, whether it's real estate or stocks or crypto, the strategy I use is pretty much the same. I'm zooming out long term. I'm not short term any of these. I'm not trading any of these. I'm not flipping any of these when it comes to real estate. So I'm looking for solid assets that I can hold for the long term, solid businesses, solid real estate. When it comes to crypto, I don't mess with the altcoins, meme coins. There's a couple, Bitcoin and Ethereum, and I own them because I believe in them long term. So it's a buy and hold strategy. Same as stocks and everything else. So asset classes, yes, diversify. If you're a new investor in stocks, definitely diversify. Definitely take advantage of index funds, which are already diversified. But as you learn how to invest in individual stocks, the main thing you should focus on is understanding the business that you're investing in. So invest within your circle of competence, understand how to research a business inside and out, qualitative, quantitative, and get really, really familiar with these businesses. Once you do, you will have great conviction and confidence where you're not really focused on diversifying, because you will have the confidence to hold these positions and not panic sell or not take profits too soon, because you really, really understand that business and where that business is going to be 5 years from now, 10 years from now, and so on. There's not going to be a drawdown, and these businesses are not going to drop 20, 30, maybe even 50%. No, that's very possible. As a matter of fact, if you can't handle that, you shouldn't be investing in stocks. But with growth stocks, that's a possibility. But know your strategy. And if your strategy is, I'm buying this business because 10 years from now, this business is going to go from here to here, and you did your due diligence the right way, then you'll have the confidence to hold that business through those rough waters, and you won't really be worried about things like diversification.